Hey everybody, Jeremy Goodrich from Shine Insurance. I get one question more often than almost any other, and that is, hey, would you send me a quote for commercial real estate insurance? And so often my answer is, hey, let's get on a call and really talk about what you're asking for here, because bidding your real estate insurance, if that is exactly what you're doing, is a huge mistake. And this video is all about why. And I want to do it by telling you a story. So the story today is of we'll call them our victims. The victims of the story here are Rico and John. These are real estate investors in New Orleans, Louisiana. They have a 144-unit multifamily property. And at the time this story took place, they were acquiring the property for the first time. So many of our clients come to us when they're picking up a new property. It makes sense, right? That's when you're thinking about insurance and when you need insurance for at least one property that you're talking about. And so they came to us, and they went to a bunch of other people as well. And their basic premise was, if you can beat him on price, I'll take it. Think about that. Have you ever been there before? Maybe you're there right now thinking about that when it comes to your real estate insurance. We're set up to think that way from commercials and things like that. Everyone talks about price, and price is obviously super important. But it's not the only thing. And I want to show you what happens when you bid your insurance against a bunch of other people. So what did they do? Well, they asked 4 agents to send over a quote. They ended up picking the cheapest one, and they were done. That's it. About 80% of real estate insurance investors, or real estate investors, buy insurance this way. I see it all the time because I'm seeing obviously a lot of scenarios. So let's look at this and really see what happens when you do this. On the screen are 4 people that Rico and John reached out to. And underneath that are groups of insurance companies. Now there's a lot more insurance companies than just 6, but we're going to use 6 as our examples here. And I want to say that the person you really want to work with is this second person. Maybe it's because you have a relationship with them before. Maybe you trust them, have some thought leadership with them. Maybe you know other people who have their insurance with this second person. For whatever reason, your trust relationship, the person you really want to work with, is that person right there. Let's also say, for the sake of this example, because there absolutely are good and bad insurance companies. And in this example, the green companies are good insurance companies, the red companies are bad insurance companies, and the white companies are somewhere in the middle of those two things. So obviously, your goal should be to have the best advisor. In this case, it's the second person. With the best insurance company at the best price. You want those 3 things, right? The best advisor with the best insurance company at the best price. So let's see how this plays out. Well, you tell the person on the left first. They're the first person that you send this out to. That person is going to go to all of these insurance companies. And if there's nothing else you take from this video, this is one of the most important reasons not to bid your insurance. There's something called blocking the market. And when you go to an insurance agent and say, hey, will you go quote my insurance for me? Only one of those agents in the commercial insurance world can quote one insurance company. As soon as an agent has blocked that market, no one else can go quote that insurance company. So what's the first person going to do? You've given them a huge advantage in this scenario. So I guess another lesson from this video is, if you are going to bid your insurance, if you are going to ask multiple people to do it, make sure that the person you want to win is the first one and give them time to block the markets. Because what that person is going to do, they're going to go out to this company, this company, this company, and this company. Now, the middle companies and the best companies are all blocked, right? So that person obviously has a huge advantage over everyone else because they've blocked all the best companies from the other agents that you ask. So now you ask the person that you really wanted. That person says no. And the reason that person says no is because they went out and they saw that the markets were blocked, that there were their best companies, and they don't want to go out to bad companies and try and win your business based on price. That's simply not what they do. That's simply not who they are. That's simply not how they play on your team as your insurance advisor. Those are the advisors that you really want to have, are the ones who will say no when they see that all the markets are blocked, because they're not really into bidding and they understand how this works. They're not going to go for the worst company. But then there's the next two. what are they going to do? Well, they still want your this is maybe $100,000 policy for 144 units in New Orleans, Louisiana. They certainly want to get it. They see all the markets are blocked and they don't care. So this guy, he goes to a bad company and offers you a bad quote. This lady does the exact same thing. So how's that turn out? And what motivation do they have, or what motivation have you created? Like, it's price. It's price and price only. Two of the four people are going to sell you what's going to be a bad insurance policy. And guess what? They're probably going to have the best price. So that's the motivation you've created. So how did that turn out for Rico and John? Well, option one was $113,000 with a good insurance company, good quality coverage. It was looking really good. Option two was $103,000, $10,000 less, just a little bit less than 10%. And it was for $103,000. Now, Rico and John have no idea whether an insurance company is good or bad. For the most part, you're not going to have a sense of whether an insurance company is good or bad. So you've created motivation for this fourth person to give you a quote at a cheaper price without a lot of knowledge about the differences. The winner, of course, for Rico and John was the third person for $103,000. But here's what we found out. There were huge coverage issues that made it cheaper. It was underinsuring all the buildings. It had ACV coverage, something you absolutely want to watch out for. It had a co-insurance clause that was too high for underinsured buildings. It had hidden exclusions, higher deductibles, and no loss of income coverage. This policy for $10,000 less was absolutely riddled with problems, but Rico and John were focused on price. They bought the policy in that scenario. Well, about 6 months in, they had a $500,000 claim. They gave me a call because I was the second agent. I was the person who said, hey, nope, I'm not interested. I'm sorry. My best markets are blocked. Looks like you're shopping. Just not going to do it. And who did they call when they were like, oh my gosh, now it really matters. Now it's a really big thing. They called me, and I have that happen all the time, where someone who ultimately didn't choose me or it didn't work out calls me when they're in need the most, because there's that trust foundation. I really appreciate that. But at that point, I really can't help them out. But let's look at what that did happen. So they had a $500,000 claim. The insurance payout. So there was a $500,000 loss, but there was a $25,000 deductible. ACV depreciation brought down the payout by $75,000 more. And there was a co-insurance penalty for underinsuring, which brought the payout another $50,000 lower. The insurance payouts, and I kind of think they were lucky in this situation, was $350,000. What would the other option have looked like had they chosen it? $500,000 loss. It had a $10,000 deductible. It had replacement cost coverage, not ACV coverage, so there was no depreciation involved. It did not have a coinsurance penalty at all, so there was no coinsurance penalty. The payout was $490,000, a difference of $140,000. Yeah, I got that right. I had to look. A difference of $140,000 in the claim to save $10,000 in premium. That is what we're talking about when we have people racing to the bottom for the best price. It ends up creating scenarios where you're spending a whole heck of a lot more money on a policy in a claim situation than you really have to. So what's the problem? The first agent has the upper hand. That's one of the problems, right? Motivation is race to the bottom. You just don't want to create a motivation for race to the bottom when you're purchasing something that protects your assets, protects your investors, and protects you. It's a financial protection. You don't want to create a race to the bottom in that scenario. The outcome, obviously, for them was a terrible policy, a terrible agent, and no advisor at all. And then, obviously, $140,000 out of pocket in that claim. So what are the lessons? Let your advisor make companies compete for you. Find someone you trust and work with them, and then let them make the companies compete for you. If they have access to all the best companies, then they have no disadvantage to the next person or the next person. So why not choose the advisor that you trust, that you want on your team, that you want to be a part of your journey into commercial real estate investing, and focus on quality coverage and price. Of course, price matters. We all get that, right? But focus on quality coverage as well. Cheap insurance really can be expensive. So one of the things that I hear from folks a lot is, hey, well, I need a ballpark. I have to go out there and get a ballpark. How do I know if I've got the right price for decent quality coverage? And so we've got a solution for you at shineinsurance.com/ballpark. Answer 9 questions and immediately get a ballpark right there. We'll give you a ballpark in your email that gives you about a $50, within $50 of what the price likely will be at the end. You'll have that immediately to throw into your underwriting and be able to pencil a property better. All right, that is it. Really appreciate the opportunity to share with you. And as always, don't forget to shine.